But our guests are joining in now. Mayuresyh Joshi is with us to discuss what all has been happening so far. Mayuresyh, hi, good afternoon. The stock of the moment definitely is Idea, but I wanted your thoughts on the telecom sector as a whole. Has the run-up, been too steep, or do you think that for a long-term investor there is still potential to buy here?
Good afternoon, Sonia. Clearly, I think the entire sector was struggling over the past few quarters, and with Reliance Jio's entry, you had seen intensified price wars happening specifically on the data front. Having said that, probably if you're looking at the trend in the way how ARPUs have panned out for most telecom operators, whether that be Idea or Bharti, they have probably shown a downward movement and probably are consolidating, specifically on the voice ARPU part. The data ARPU part also has been consolidating on the downward side. And as seen from Bharti's result, currently I think per MB, the pricing was actually around 17.97 paise. So clearly I think the offsetting effect has to be an increase in data volumes, and Jio's offering still free till the end of March. That put additional pressure in terms of their core dynamics. Secondly, in terms of their spectrum liabilities as well, what they've incurred so far and what they need to pay on a piecemeal basis going forward, that did put stress on their balance sheets. If you look at the net debt to EBITDA levels, Idea well in excess of 4.5 times, Bharti Airtel similarly has net debt of more than 97,000 odd crores, and servicing of this debt also takes a toll in terms of their cash flows. Third, again, in terms of their revenue market share as well as their subscriber market share, they had seen meaningful gains come through. But again, I think we'll get clarity on data in terms of how Jio's market share is expected to pan out, and with the base that Jio is probably looking at, I think the telecom industry probably was suffering in that respect. So again, I think with all these news coming through, I think one really needs to really understand the terms of what these mergers are going to be if it has to happen.
Okay.
And secondly, again, I think the implications thereof would be clearly known once these definite details come into place. But largely, again, I think Jio's entry has created a disruptive field for the telecom sector as a whole. And again, I think what happens in terms of action going ahead, specifically on the data front, because that is one area where margins and volume growth will be looked at.
Okay, point taken. Mr. Sen, good afternoon. Stock of the day Idea, sector of the day telecom. Your thoughts on how to approach the big stocks now, Idea, Bharti, even Bharti Infratel, and maybe Arcom?
See, Anuj, those who are invested in the telecom stock, I'll advise them to use this opportunity to exit. For the simple reason, if you take the Idea Vodafone, which is a theme for the day, you have seen Idea market cap, moving past 5 billion or maybe 5.3 billion if I take the price now. And if you see the volume, I don't think that on a very small volume, I'm using this word on a small volume, 13-14 crore shares, with 360 crore as the issued shares, and if you have a 12-13 crore shares having traded, which are largely seen as a short covering because the result was delayed by the company, which was earlier scheduled for 23rd January, we are seeing more of the short covering now seen in the Idea, number one. Number two, if you see the Vodafone, which have been looking for a valuation of $11 billion, and if you add $5.5 billion expected, market cap of Idea, and if you take that as the base valuation for combining with Vodafone going forward, I don't think that the worth of the merged entity is seen at $16 to $17 billion when you take 21 billion or maybe sub $21 billion for Bharti Airtel. In spite of taking that debt and all that, I'm just referring purely the market cap. So going forward, and number three, I don't think that the existing players have in their control. If Reliance Jio continues with the aggressive pricing plans, which they, as of now, they are looking in a mood too, because the free offer is valid till 31st March. Let's not forget that this is not an end of the story, that from 1st April things will not be again seen getting very aggressive from the Reliance Jio end. That will again be the problematic things start happening from Bharti Airtel. And lastly, we have seen the effect of Q3 results in Bharti Airtel. I won't be surprised to see the negative, the losses or bottom line coming in red for Idea for Q3 in spite of all this merger. And there are so many if and buts between the mergers also, how much spectrum has to get surrendered, what timeline will be seen, then thereafter what kind of valuations people are looking to, whether the towers business, which are held by both the companies, though Vodafone has clarified that the 42% stake which they have in the tower business is not getting included. So all those things I don't think will justify. This is just a frenzy, more of the what you call strong hands, because if you see the institutional holding or maybe the foreign ownership in Idea is at about 55%. They will not be wanting to get their valuation destroyed, and probably they'll be equally keen that this merger should happen with Vodafone to salvage or to protect the value of their investments in the company.
Sure.
So taking all this, I'm keeping my neutral view on the telecom stocks and advise to use this opportunity as an exit.
Okay, in fact, we'll come back to you for some more stocks, but in the meantime, the other story, the exclusive that you heard earlier today, Piramal Enterprises has kicked off the year with an acquisition, formalizing a deal to acquire the portfolio of spasticity and pain management drugs from Mallinckrodt. Listen in to what the management has to say.
These products as of today, actually it's just one product which has a sales of $45 million. We are acquiring one product as well as two other products which are under development. And these sales that we are doing are today only in the US. We've got also, in addition to this, marketing authorizations in other 8 European countries. And we would over time actually increase these authorizations over other countries. So we have these products for the global market, and all markets are available to us, but today they are sold only in the US. The payments that we are doing today is going to be 171 million, which will be the first tranche of payments. Now, and depending on certain milestones that are there for the top line as well as for the EBITDA that is generated from these products, we could pay another additional 32 million over the next 3 years. So that would begin in 2019, 20, and 21, equally over the 3 years.
And the visibility as far as revenues and profitability is concerned?
So the profitability of this is a high profitable product. The EBITDA margins are good. They will be accretive to the current EBITDA margins that we have in the pharma space. And we believe that most of the overheads and all that are there, we've already incurred all those expenses. So these will straight add a contribution to the bottom line.
So they'll start being margin accretive from the moment you start accounting for them in your
Yes.
business. So if we talk of the US market particularly and your business there, if you could help us understand how you're building the sales force particularly from the front end position. You don't currently have a large presence in the US front end, so to say. With this product, because it is selling in the US market, how are you building that? And over time, do we see Piramal becoming a front-end player in the US in a larger scale?
So we have, our strategy in the US has been really to go into niche products. And these are niche products which, though they are generic, they are branded generic products which are either difficult to manufacture or difficult to do sales and distribution. So there are certain barriers to entry in these products. And thus we have inhalation anesthesia products. As you are aware, we are in the whole range of anesthetic products. We are adding, we have sevoflurane, isoflurane, and halothane in anesthesia products. We are adding to this products of the desflurane. We have also now acquired these products for pain management and spasticity. So our focus has been really to increase our sales force and our distribution network. With these products of Gaboflin, we will add about 24 people in the sales force.
Okay, that was Ms. Piramal. Just keep an eye on ICICI Bank. It's inching up a bit. Almost broken into the green, not quite there yet, but there's some bit of buying that's visible there. And also Reliance Defense in the mid-caps basket, that's one stock which is surging now. Pull out the intraday chart of Reliance Defense, and that's up 8.5%. Actually, before we take a break, Ashwin, I just wanted your thoughts, incremental thoughts on the Bank Nifty. It's almost at the low point of the day, and if it closes here, does that change the overall texture?
See, basically 19,500 is the strong support. So today you can just say it's mild profit booking, but in case we start trading below 19,500, then maybe you could have a deeper correction. See, everything is way off the charts and quite a bit far off from the averages. So, some catch up will happen, and in that course, you'll see, Bank Nifty doing up and down, sideways type of movement. So this is fairly normal. I think you will now spend time in a sideways zone before the next move happens.
Okay, well, Bharti Airtel has lost a lot of its gains intraday. So if you look at the intraday chart, you'll see it now up just about 6% It was up more than 11% at one point in time. So giving up some of its gains over there. We'll track these stocks closely, but we'll take a break for now. Our closing bell money control question of the day is, will Donald Trump target Indian tech workers in the US? Log on to moneycontrol.com, post your responses there. We will read out some of the most interesting ones post 3:30 p.m. today. Also up next, to brighten up our Monday, we have our Monday special Mid-Cap Mania with Nigel D'Souza. We'll tell you what's on his radar when we come back in just a bit. Welcome back. The stock that's picking up some pace now is Godrej Consumers. Remember, the company had a decent quarter this time around, and post that, the stock post 12 o'clock has actually moved, and now it's at the high point of trade, as you can see, up more than 3% Sandeep Wagle also joins in to give us his view on individual stocks. Sandeep, what are you looking to buy or sell now?
Afternoon, Sonia. I would go with a buy in a Castrol, stop loss 405, target 423. And a sell in a Tata Motors, stop loss 539, target 521.
Okay, Sandeep, thanks a lot for those trading ideas. Tata Motors has been a bit weak through the day today. The Sensex Nifty mid-cap in the red, and the problem for the market today, of course, has been the way the Bank Nifty has declined today. Not by much, but still trading at the low point of the day. But no doubts on what's been the stock of the day, and easily the story of it doesn't get bigger than this, and you heard it first on CNBC TV 18, August 23rd, 2016 was, I remember I was sitting here, Sonia was sitting to my left, and Nisha Poddar was sitting to Sonia's left, and Nisha broke the story on Idea and Vodafone considering or exploring merger talk. It was denied by Idea, by the way, and we should maybe look at the denial, the strong denial that Idea had posted after that. It's available on the BSE website. But today, Idea is acknowledging, after Vodafone did on London Stock Exchange, that yes, they are in talks for a potential merger. Nisha.
Thanks for that, Anuj. Of course, you spelt out the entire story. Of course, the strong denial which really came from Idea had got us thinking here in the newsroom, but then we still went ahead with it because our sources were just so strong, and that's exactly that has really come out today. Vodafone as well as Idea both have gone ahead and confirmed that CNBC TV 18 exclusive on the 23rd of August. So today they are talking and in advanced stages about that large merger that we had first spoken about in August last year. What Vodafone has said, and not really given much details, is that Vodafone PLC says that it will be, what they're talking about is a merger. They have said that there's no indication that the deal is imminent, but they are talking at the moment with Aditya Birla Group company for a merger. And Idea will issue fresh equity shares for the merger. And the very important bit to note here is that Vodafone will deconsolidate Vodafone India as part of the deal. Now, this is a very important bit, and this gives us some understanding of what the entire deal structure could be. Of course, it's a very complex deal where a combined Idea as well as Vodafone will become the largest telecom operator in terms of revenue market share. beating the Umro Numo, that is Vodafone, which Bharti Airtel enjoys at this point with 33% RMS, and they would just lead to over 40%. So it would be a big behemoth. But remember, the big contention that I had picked up earlier was that Aditya Birla Group's promoter, Mr. Kumar Mangalam Birla, did not want to have just a minority stake in a company which was supposedly double the size by merging into Vodafone India, which is double the size of Idea Cellular. Idea Cellular's market cap close to about $5 billion, while Vodafone India, which was preparing for an IPO, was looking at a valuation of over $10 billion. So, of course, with this merger, it would have landed up being a minority player. But with this deconsolidation, it's very clear that Vodafone PLC will not have the controlling stake probably. There will be a stake balance in which probably an investor can also come in between Idea Cellular as well as Vodafone. So yes, the whole dynamics of the industry changes, but Bharti Infratel is one stock which is depressed in trade today because of also this can derail first the business prospects and then the big sale that it is looking at as well. So both these can really put Bharti Infratel in pressure.
Oh yes, in fact, that's a stock that's really fallen off a cliff today. It's now down about 7 to 8 odd %. But Nisha, kudos to you for having the courage to stick your neck out with such a story. Thanks so much for giving us all of those details and giving the market those details well in advance. You heard it first on CNBC TV 18, and that pretty much is the story of the day, the week, the month, and most probably the story of the year as well. We in fact did speak with a lot of sector experts, Naveen Kulkarni of Phillip Capital and Nitin Soni of Fitch, on what they make if this merger goes through, when this merger goes through, what the prospects could be for the industry. Listen into what they had to say.
With a combined market share of closer to 40%, the combined entity will be the #1 telecom operator in India in terms of subscriber as well as revenue market share. So, of course, they will be a very formidable player and with a great competing capability. On every front, this is a very, very big positive because eventually telecom industry's profitability is determined by only one factor, which is the industry structure. And with this kind of merger, the industry structure is set to improve big time. And definitely it makes a lot of sense to start looking into telecom sector as a whole, not just Idea Cellular.
Definitely these two telcos combined, the two significant benefits which will come in is the EBITDA accretion in the circles where the Vodafone and Idea may not have, average, may have less than average EBITDA margin than the other circles. So in those circles, they will reduce their losses and the EBITDA margin will enhance in those circles and will benefit the overall consolidated EBITDA margin. Bharti's consolidated India's mobile margin is in the range of 35 to 40%. They will definitely benefit with this merger, and the combined entity's EBITDA margin could increase to about, somewhere around in the range of 35%.
Okay, so it is a win-win both for Idea and for Vodafone when this merger goes through. But enough of this story. We'll of course keep talking about it. But let's move on since it's Monday. We'll brighten up our Monday with our special mid-cap mania with Nigel D'Souza. Today he's going to tell us about a hospital company that has been growing rapidly in South India. Nigel, take it away.
Well, Sonia, we have been struggling to understand the impact of demonetization. So, one place where you could always go and in fact prepone rather than postpone your spending was a hospital. And that's why I was just looking at various hospital companies, and this one came on my radar. Remember, it's very, very low volumes. So just hear out the full presentation as well. Kovai Medical Center and Hospital, that's the stock that we're talking about. It's 1,100 crore market capitalization. And in fact, it's situated in the south. That's in Coimbatore. Now, I was going through the annual report, trying to understand how many hospitals and how many beds they have. Now, they have roughly around 4 to around 5 hospitals. And in terms of beds, in one of the annual reports, they said that they moved to around 1,000 beds. In another one, that's in 2013, 2014, they've said they're looking to expand into Chennai. Over there, they're looking to set up close to 300 beds at a cost of around 300 crores approximately. And in the recent annual report, what they're saying is that more than 60 beds have now come onto stream. So that's in terms of the beds that they had. But the financials that you were talking about, splendid. You know, in the last few years, it's moved, in the last 10 years, it's moved from around 50 to around 60 crores to around 460 crores. So just from FY12 to FY16, the revenues have close to have doubled. The operating profit as well has done very, very well. It's moved from around 45 crores to around 92 crores. Though in the last year, that's between FY15 and FY16, there was a bit of a lull. And in spite of that, you have a CAGR of more than 20% just in this period. The profitability as well has done very well. It's moved from around 12 crores to around 40 crores. But again, just in the last year, there was a bit of a slowdown that we saw. The return on capital employed as well has been improving gradually. It's more than 20 to 24% approximately. So that as well is looking quite good. But in the last year, as I said, there was a bit of a slowdown. First half of this year has been splendid. Top line growth of around 16%, operating profit growth of around 36%, and margins have improved by roughly around 400 basis points. Profitability as well, they've already done 31 crores. Last full year, they did around 42 crores. That's because even the finance cost has dipped on a year-on-year basis by more than 10%. Debt reduction, that's something the company has been focusing on in the last few years. They reduced debt from around 150 crores all the way to around 75 crores. So you should keep your eye on that one. And the finance cost as well has been reducing on a per annum basis from around 29 crores all the way to around 17 crores approximately. In terms of peer comparison, Apollo Hospital, that's in a league of its own. It's one of the big boys. That trades at close to around 38 times Thomson Reuters estimate. So that's something you should keep on your radar. Indraprastha Medical, the Delhi government has a stake in that one. So it's regulated in terms of some part of their fees. That is trading at around 21 times. And Kovai, it's only in South India. So that's trading at a discount of around 16 times because it is only in one part of the country. But in terms of margins, Kovai has done quite well at the half-year mark. It's trading at it's done margins of around 24%, while its peers, if you want to compare it, it's trading at around the margins that they delivered 11 to 13%. Obviously, the big negative is where does the next leg of growth come from? It's only in South India, and if they're doing so well, the dividend payout is not going over 1 rupee 50 paise to around 2 rupees 50 paise. So that's a couple of negatives. Back to you all.
Okay, Nigel, thanks a lot for that. Standard disclaimer, this was not a stock recommendation, just some interesting tidbits on a stock that Nigel found interesting. We'll take a break with the news that the market hasn't done much today. It's just been individual stock-specific story. Some updates on Tata Chem. Let me see if it is of use for investors. Not too much. They're investing about 200 to 250 crores in a plant. They've signed MOU with the government. We'll take a break. Our closing bell money control question of the day is, will Donald Trump target Indian tech workers in the US? Log on to moneycontrol.com and post your responses, and we'll read out some of the most interesting ones post 3:30. Welcome back. Well, the stocks which are looking up now are all the NBFC names. So pull out the intraday chart of Canpin Homes first. That stock is now trading at the high point of the day. Apart from that, if you see Bajaj Finance as well, look at that move on Canpin Homes, up 4% right now. Most of that move in last 5 minutes of trade. Bajaj Finance has been strong since numbers, but it's the second round of buying that you're seeing here. And also, let's pull out Bharat Financial Inclusion intraday chart of that stock. It was weak early in the morning. It was down about 2.5% at the low point, and it's, look at that, actually it's a vertical rally that you're seeing on Bharat Financial as well. BTSC time, buy today, sell tomorrow. Ashwini and Mitesh still with us. Ashwini, before your stock ideas, just a word on these NBFC names, and then of course your BTSC trades.
See, these are no-brainer type trades because NBFCs have bottomed out. Everything they lost out because of demonetization, and now is the time to get back into them. So all of these stocks should move higher. Banks could, remain sideways, but I think NBFCs where there is no ICICI Bank or State Bank, etc., corporate-facing banks, I think they could outperform. As far as stocks right now are concerned, Castrol is a buy with a stop of 406, target of 425. Century Textile is a buy with a stop of 845, target of 870. In India, Glycol is a buy with a stop of 162, target of 176.
Okay, Mitesh, what about you? What are you buying or selling now?
See, I think all these stocks are doing pretty well, and Tata Global and McLeod Russell are on the radar, and I picked up a McLeod Russell to buy. Let's buy with a stop at 155 and look for targets of 168. It's moved up slightly, so try to buy it around 159. And the other stock is India Bulls Housing Finance, and that's a good intraday setup. So buy with a stop at 760, 759, and look for 790, 795 as the likely target.
Okay, well, we'll discuss more stocks, but for now, let's move on to discuss more numbers. Today we have three big companies coming out which together account for almost 10% on the Nifty. We have, of course, ICICI Bank, ONGC and Bajaj Auto that we'll be previewing right now. Let's start with the biggest of them all, ICICI Bank. Abhishek, what are we expecting?
The street is actually expecting a subdued quarter to say, NII growth is expected to be down by close to 2%, while net profit is expected to decline by 28% on a YOY basis. However, the key factor is slippages and how the slippages actually trend up. Slippages is expected to be between 7,000 to 8,000 crore. If you look at the last 2 quarters, about 52 to 54% of the slippages have come in from watch list alone, 15 to 16% from restructured book, and 28 to 29% of other slippages. So keep in mind that after Q2, that is the end of 30th September, majority of the restructured book is expected to come out of the moratorium, and things have not looked good in the economy. So slippages from restructured book will be seen. Watch list of ICICI Bank is about 32,400 odd crores, which forms slightly more than 7% of the loan book. Now slippages from watch list will be seen closely. So expect our polls suggest that there will be pressure on the earnings per se due to elevated credit costs. They have a cushion of 2,055 crore in terms of contingent provisions that they created way back in Q4 FY16. So overall, our poll suggests an NII to be at 5,359 crore, which is down 2% on a YOY basis, while net profit at 2,180 crores, down 28% on a YOY basis.
Okay, oh yes, after the kind of asset quality pressure that Axis Bank threw up, there was a lot of caution in the ICICI Bank stock as well. Now down about 0.5% in the run up to the numbers. But the other big boy will be ONGC. Varinder, what can we expect?
Well, good to stable set of numbers. The ONGC results move in line with how crude has done. Net realization expected around $50 per barrel compared to $45 or $45.5 what they did last quarter. They have been reducing the operating cost, and that is why the margins are becoming good for the company. Remember, 3 quarters early, the net realization for the company was only $28 per barrel. Since the crude has moved up and they have been reducing the operating cost, you are seeing the margins improving, you are seeing net realization improving. So if you're watching out for numbers, net profit is seen at nearly 4,900 crores compared to 5,000 crores what they did last quarter. All these numbers are on a sequential basis. Income is seen around 19,500 crores. EBITDA is seen around 10,000 crores, and margins are seen at 52% compared to 49.5%. 3 important things to watch out for in ONGC clearly. One is the volume number in terms of oil production, which we are expecting around 6.4 million ton, which is a slight uptick in terms of quarterly numbers. Net realization, I mentioned that we are expecting around 50 compared to 46, and the last number is gas production, which we expect around 5.6 compared to 5.5. So these 3 numbers, and if reduction in operating costs comes in, also please watch out for any announcement coming on the dividend play, because more than the numbers these days, sometimes the announcement in terms of whether the company has increased the dividend or not could be material for the company. They have already announced bonus last quarter.
Oh yes, that's something that we'll be watching out for. Varinder, thanks a lot for that. The other number which will be important is Bajaj Auto, because it's we've seen what happened to TVS or a couple of others, but Bajaj Auto, what are the expectations?
Well, the expectations are subdued, but as we've been seeing in the past, if they surpass subdued expectations, then the street generally likes that. So I'll tell you what, they've been one of the worst hit because of demonetization. So revenue will fall about 10% the profits will fall about 1%, the EBITDA will go down by almost 18%. But most of this, I think, is something that the street is aware of. If you look at the volumes overall are down 10% for the company. It's not only domestic volumes that have fallen, but export volumes are also down. So you've seen exports drop almost 17.5% because many of their markets markets continue to deteriorate, markets like Nigeria, Egypt, etc., the weakness in the three-wheeler sales is also something that will crunch down their margins, because three-wheelers is generally a higher margin business. The overall operating margins are expected to crunch down to 19.9% versus 21%. But like I said, this is something that the street is already aware of. In fact, Bajaj Auto Management was the first to tell us that demonetization will impact their earnings way back in November. And since then, the stock, I think, is also priced it in.
Okay, Sonia, thanks a lot for that. Well, before I go back to Varinder for a list of buzzing stocks, I wanted Mr. Tulsian's thoughts on whether he would want to bet on any of these three names. Mr. Tulsian, ICICI Bank, Bajaj Auto, or ONGC?
Anuj, probably if I'm a brave trader, then I'll go with ICICI Bank, because I'm not expecting much disappointment after the results, in spite of, because generally we have seen that in ICICI Bank there is very strong institutional interest, and then yesterday we have seen the huge quantity having bought in the stock. So I won't be, though I generally advise that you remain away ahead of the numbers and all that, but I won't be hesitating taking a buy call on ICICI Bank in amongst all three.
Okay, point taken. Let's discuss some buzzing stocks now and go back to Varinder for that. Varinder?
Well, some of the new names again, as we always start, one is Vijay Lakshmi Engineering Works, Frontier Springs, Coral Lab, Artec Power Products, Seahorse Hospitals, Tirupati Surgeon, Mangal Credit and FinCorp, and this Jamshri Ranjit Singh Ji spinning. This stock has been moving in the last 2 or 3 days consistently on good volumes, again up 6.5% today. Some other small cap gainers, Manglam Organics up 20%, International Compulsion, Walchand People First, Neeraj Cement, Shri Krishna Paper Mills. NFL has been moving up, some of the fertilizer stocks ahead of the budget. Jayashree Chemicals, PAE Limited, VAS Animation, Kerala Ayurveda, NTT Limited. Some of the mid cap gainers, look out for Future Enterprise and Future Enterprise DVR. Both these stocks are up by anywhere between 10 to 11% right now. Bank of Maharashtra ahead of the numbers tomorrow is moving up nearly 8%. LT Foods, all these rice stocks have done wonderfully well in the year to date 2017. Tasty Bites post the results coming in, and some of these holding companies like BBTC and Bengal and Assam are moving up today. Some losers like Swan Energy, Hindustan Motors, IFB Agro, Bhushan Steel and STC, which is down 5% circuit.
Okay, as always, thanks for enlightening us with a lot of those new stocks. We'll take a break on that note. Our closing bell money control question of the day is, will Donald Trump target Indian tech workers in the US? Log on to moneycontrol.com, post your responses there. We will read out some of the most interesting ones post 3:30, and when we come back, we will be in time for the closing of the day. Down to the close, and all we can tell you is, although the market is flat, the Bank Nifty has been exerting pressure today, down almost 0.7%. IndusInd Bank is down about 1.5%. Kotak Bank is down 1.5%. So there's a bit of nervousness in the banks as we head into the big union budget. Anand Tandon joins in into the last 10 minutes of trade. Anand, hi, afternoon. How are you approaching the big event? Would you expect the Nifty to hit 9,000 irrespective of which way the budget goes, because of the uptrend that we've seen up until now?
Well, obviously the uptrend has been very robust. One cannot deny that. I don't think the budget itself can do anything in a very proactive way to try and increase the demand, which is a key factor missing in the economy right now. I'm sure we've seen most of the proposals that are being discussed in the market right now, to my mind, are demand destructive, especially increase in service tax can actually set back demand quite considerably, and that seems to be almost given. Capital gain increase in timing also is not particularly good for the market. So I don't see that the budget is going to be very market friendly, nor do I see that you have a situation where the government alone can increase spending enough to be able to increase the demand growth. So I think, at best the budget can be marginally negative. Whatever else happens in the market will happen despite the budget.
Anand, afternoon. The other talking point has been the NBFC earnings. And of course, after Bharat Financial today, Bajaj Finance also looked really strong. Do you get a sense that the fears were overdone, or and I mean the stocks are still buys at current price, or would you give them a pass now?
Well, the reality is that I think what has helped these earnings is the fact, especially for the microfinance companies, what has helped the fact is the increase in timing for recognizing an NPA. So the RBI has been very kind with these balance sheets in terms of allowing the companies to not recognize NPAs now for, I think, 90 days. And consequently, it has essentially pushed the problems into the next quarter. Now, so long as the bottom line can continue to grow, I think the NPA, when revealed, will actually show that the numbers are perhaps not very scary. The reality is, whatever I can understand from the market, is that there has been a significant setback, and especially in the north, the setback is very, very significant. Given what, for example, the major parties, including the BJP, have said in terms of loan waivers, I think at least the microfinance sector in the north remains, to my mind, fairly suspect. For the rest of the NBFCs, especially those related to farms, I think you may be a little more sanguine, especially since everybody is expecting, and I don't see any reason to doubt, that the government will actually go and give out major SOPs for the rural areas.
Okay, well, we are counting down to close. I wanted to ask you also about the telecom space because that's been in the news. But before we do that, let's get some market opinion for our viewers. Gautam Shah, the Associate Director and Technical Analyst at GM Financial, spoke with us earlier in the day. He expects the Nifty to test 8,900 in the medium term. And for global markets, okay, by the way, those are Tech Mahindra's numbers that are flashed for you on the screen. The net profits have come in at 852 crores versus a CNBC TV18 poll of 780 crores. So that is much higher than expected, the TechM numbers. In fact, that's the first number that we have, the standalone net profit that has come in at 852 crores, higher than estimated. And that stock is actually surging at the moment. Any more details?
Yeah, actually the press release is just open. So I would want to see if there is, okay, it's open now. Let me first see the other income because, okay, a lot of this is other income, especially there's exchange gain which is there, which always looked the case because it's not been an environment where IT companies should be beating estimates by such a wide margin. So there's foreign exchange gain that we have of 121 crore that compares to 98 crore for the previous quarter. But apart from that, let's look at some of the other numbers that we have. The total income has come in at 5,912 crores, Sonia. That's actually a good number because if you compare it to 5,680 crore, which was the case quarter on quarter. But the stock had a big spike and after that it's a decline. Yes. That's mainly because this big net profit jump has come because of other income. The profit before exceptions has also actually gone up. It's from 768 crore to 866 crores. So that's the overall numbers that we have.
Yes, I'm still waiting for the dollar revenue number because that will give you a better indication of which way things could head. We're expecting a dollar revenue growth of just about 2% in tandem with the way the rest of the industry has performed. $1,094 million is the poll that CNBC TV18 has thrown up. So for now, the only number that we have is the standalone rupee revenue number, which is at 5,900 crores or so, and the standalone net profit number. I'll wait by for the dollar revenue numbers to get a proper assessment of the earnings this time around. The press release has not yet been uploaded. The fact sheet is not uploaded on the exchanges just yet. The only numbers that we have are the standalone net profit number that's currently on your screen. Anand, you want to come in on how some of these IT companies have performed this time around? We're still awaiting more details from Tech Mahindra, but in general, there's so much caution around this sector because of what's happening in the US. Any thoughts on how to approach it here on?
Well, from an investment point of view, this seems to be now a level at which you can't be selling. And therefore, the only question is whether you should buy now or later. To the extent that the complexity continues in terms of immigration policies and so on, there may not be a hurry to be getting into it. But for someone holding on to it, I would not suggest that you should be getting out right at this stage.
Okay, well, these are standalone numbers, of course. So we'll wait for consolidated numbers and then we will take a call on whether these numbers compare favorably or unfavorably to the kind of estimates that analysts had. Ashwini, before markets close, what's the index trade now for on any of the indexes, Bank Nifty, Nifty, or the IT index?
So if you are long from like 18,200, 400, I think you can take it off. Next couple of days, nothing is likely to happen. Even post the budget, I think you already had a rally. So the market is getting ready to move sideways. So whatever happens in the budget, I think you will, probably consolidate these gains, and then possibly from 84.50, the next fresh leg should open. So this is a good time to take profits and enjoy the next couple of days.
Okay, just about 2.5 minutes left for markets to close. So let's just do a quick recap. And I'll tell you something, today was quite a listless day as far as the Sensex and Nifty are concerned, but it was far from listless as far as individual stocks are concerned. And today, as we've been repeating ad nauseum, the story of the day, or perhaps the year, was the supposed idea of Vodafone saying that yes, they are indeed in discussion for a potential merger, and that had its impact on individual stocks. So the top two gainers were Idea and Bharti Airtel. Idea was up 26%, Bharti Airtel was up 7%, but Bharti Infratel was down about 7%. By the way, consolidated numbers of Tech Mahindra will flash on screen anytime now. Apart from that, the stocks that moved, Reliance was up 2%, Grasim was up 4.5%, Lupin, Infosys. After that, it was really just 0.5% or 1%, both on the gaining side and on the losing side. Tata Motors was down 1.5%, State Bank was down close to 1%, Aurobindo Pharma was down 2.5%. That's all. Okay, before we move to mid-caps, the numbers flashing on Tech Mahindra. Revenue of 7557 is actually ahead of estimate, and the net profit of 840 crore is also ahead of estimate.
Yes, it is 845 crores is the net profit, so well ahead of what the street was estimating at about 780 odd crores. I'm just opening up the press release. We'll get the dollar revenues for you in a bit. The rupee revenues at 7557 crores are much higher than street estimates. The EBIT has come in at 938 crores. That's actually in line with estimates. So that would be 933 crores was the expectation, and 938 crores is the EBIT number that has come in. So largely in line with estimates as far as the operational performance is concerned. Bottom line is better than estimated. Remember, the number to look at for dollar revenues, okay, just getting that press release opened up in a minute from now.
It's not in this, Sonia.
Yeah, okay.
We'll wait. We'll have to wait for third press release.
The EBIT margin has come in at 12.4% versus an expectation of 12.6%. So operational performance is largely in line. No problems at all over there. In fact, no negative surprise, no shocker in the operational margin performance, and that's, I think, something that the street likes. The fact that there's been no shocker this time around as far as margins are concerned. So we'll get some more, some more clarity on the numbers. But for now, the operational performance is in line. No negative surprise this time around in the earnings. Quickly, let me just take you through a couple of other stocks that have been moving around in the broader markets. Although the index has been flat, there were some good numbers this time around that came in from the likes of Bajaj Finance. That stock closes in the green. Godrej Consumers had a good session, so that stock too ends up in the green. And you have Bharti Infratel on the downside. That stock really took a beating today, down almost about 7% or so. Relcom was the other stock that moved in tandem with the rest of the telecom space, so up almost about 12% for Relcom. And a couple of other stocks like India Cements had a good run today, so posts the good numbers on Friday, so that stock too was up in the green. But if we have our guest still with us, a forex gain is what we've seen for Tech Mahindra at about 90 odd crores. Let's just try and revisit the numbers for you. We're still awaiting what the dollar revenue number is, but the other numbers look fine. In fact, the net profits are higher than estimated, and now the fact sheet is also opening up. So I'm just going to try and get some more details on it.
Till the time you do that, let me take first thoughts from Ms. Tulsian. Ms. Tulsian, on Tech Mahindra, any preliminary thoughts?
See, Anuj, I have not analyzed the number, but as such, I have been keeping the negative stance on all the IT stocks, and largely the bigger one, mainly from the US point of view. There is no point in taking the historical call on the Q3 numbers, because there are so many data points, which needs to be understood. First, on the guidance, and then thereafter the US attitude, going forward. But as of now, if you take a call or take the situation, I don't think that there is any point in taking a call on IT and pharma both.
Okay, well, some more details coming out on the utilization rates, etc. But for now, let's get a quick comment on how the initial numbers look. Mayank Babla of KR Choksi joins in now. Mayank, a few numbers that we have, preliminary details. Net profits at 845 crores. The margins have come in at 12.4%, and the EBIT too is largely in line with what we were estimating at about 938 odd crores. How would you react to these numbers?
Hi. Actually, yeah, on the face of it, the numbers have come better than our estimates, and almost in line or marginally better than street estimates. On the face of it, I believe that the numbers are good. The management had indicated last quarter as well that they'll have a better hold on the LCC business by the third quarter. So what I would like to do is hear their commentary on the LCC business as well, which has been the main drag. And I'll have to probably run through the numbers on the telecom business, which has been doing good in the last 2 to 3 quarters. I would want to see if they're maintaining the same consistency.
Okay, but what would you do with the stock? It has closed with a gain of almost about 1%. Given that these are not such a bad set of numbers, in fact, on some parameters, it's actually beaten some estimates. Do you expect any kind of outperformance from the stock here on?
Yeah, I believe that certain margin levers that the management has been talking about should start kicking in, and we are positive on in the long term on Tech Mahindra. Some of the margin levers like restructuring of the employee pyramid, and apart from that also offshore, as in that line as well, offshoring certain employees. Apart from that, restructuring the LCC business portfolio. All that, I believe that it's positive in the long term for the company. So
Let me just give you the dollar revenue number because it's come.
Please.
The $1,116 million is the dollar revenue. That's slightly higher than what we were estimating at about $1,094 million. At $1,116 million, what would your reaction be?
I believe it's a positive. It's a very positive number. We had an internal estimate of $1,095 million, and that's a beat on our estimate and the street estimate as well. So all in all, I feel it's a good set of numbers that the management has delivered, and they've kept to their promise, as they had said in the last conference call.
Okay, actually that number looks quite good because it's in the current context, it's a beat of more than 1%. 1% may not sound big, but dollar revenue growth of 4.1% quarter on quarter for a large company is really strong. And I tell you something, for Tech Mahindra, what's interesting to point out is if you see the stock as well, it's a stock, of course, which is still off its highs, but I mean, not as much as say an Infosys is. So that's interesting. Tomorrow morning will be interesting to see this market reaction. My sense is that there could be a couple of upgrades on Tech Mahindra. But Karan Torani of Daulat Capital is also with us. Karan, good afternoon. Your thoughts on this 4% dollar revenue growth and the overall numbers from Tech Mahindra?
These are a good set of numbers. Q4 is a seasonally strong quarter for Tech Mahindra because of Comviva, and the margins have also have expanded well in line with our expectations. So overall, it's a good set of numbers.
Okay, good set of numbers coming in. Dollar revenue growth of 4%, the margins at 12.4% in line with estimates, and the profits better than street estimates. Karan, hi, afternoon. The stock has had a fairly decent run over the last 3 months. I mean, it's gone from around 400 to, it went to a high of 500 in the month of January, although it's come off a bit right now. Given that these numbers are decent, the dollar revenue growth is much better than many of its peers. Would you expect more upsides in the stock in the near term?
Yeah, so stock is trading at fair valuations today, and you could expect some kind of upward movement tomorrow at the opening.
And what would your pecking order be now that all the IT companies have delivered their numbers?
So pecking order case, we've got HCL Tech, which still remains to be our top pick, followed by Infosys, Tech Mahindra, and then TCS, and then we have a reduced rating on Wipro.
Okay, you said it's trading at fair value. Based on these numbers, do you expect the fair value to rise a bit?
Yeah, we do expect, but we need to wait and watch as to the management commentary, whether this was more of a one-off quarter or will they consistently perform delivering this kind of growth.
Okay.
Because they had deals in pipeline which are large in the telecom vertical, but we need to wait and watch as if this is because of a one deal impact or something different.
In fact, there are some more details which are looking very good, Anuj. The constant currency growth has come in at 5.4% quarter on quarter. So that's pretty good. Dollar revenue growth of 4.1% quarter on quarter. And other highlights as well, the number of clients that they have added, etc., look quite positive. The management, Vineet Nayyar, the vice chairman, has said that the strong deal wins and business momentum during the quarter reaffirm that we are on the right track to capitalize on the opportunities from the global digital transformation and see measurable benefits from that. So a lot of internals are actually quite positive, including constant currency growth.
Oh yes, and you know what, now we have had what, all 5 IT index companies which have come out with numbers. Suffice to say that this would go down as best in class, and that's reflected in the overall pecking order of late that you've seen. HCL Tech of course has been in a different class altogether in terms of the stock performance, but Tech Mahindra will be interesting to see its stock reaction tomorrow morning, Sonia. But yeah, I mean, you can't fault on these numbers. But as Karan said, let's wait for management con call whether it was a one-off that that bumped up the numbers
because of Comviva.
Exactly. Yeah. Even if that's the case, I think suffice to say that the stock should have hit a near-term bottom, and let's see from tomorrow how it does.
Okay, I think we still have Mayank with us. If we do, Mayank. We are getting more internals now. Constant currency growth is very strong, coming at 5.4% quarter on quarter. Dollar revenue growth of 4% quarter on quarter. What would your view be?
I guess I would like to see the deal wins that they have this quarter. In the last quarter, they had around $325 million worth TCV in the last quarter. So I would like to have a look at that and definitely listen to the management in the commentary on Q4 and the year ahead. Apart from that, it's a very good set of numbers, as I said, and definitely the stock will have a positive reaction to